Good morning, everyone. Welcome to Admiral Markets. Welcome to this trading room. In fact, we're going to take a look at the technical analysis and charts in this webinar. Live charts, that is. So we're going to be analyzing the currency markets in this webinar. First of all, though, before we actually go to the charts, this disclaimer explaining that the material here is for a global audience. This might not be suitable for everyone. To get the corresponding charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then we have the risk disclaimer, of course, explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause. Oh, I want to say please pause the video, but we're watching a live webinar here. That's funny. But if you are watching the webinar recording, you can always pause it. If not, then by continuing watching this webinar, you agree with the risks involved. And you agree with the disclaimer here as stated. Thank you for your attention. So we're going to take a look at the live charts. First of all, this is a quick go-to trading plan, which has 5 steps. Step 1 is defining the trend. Step 2 is looking for the opportunity. Step 3 is checking the filters. Step 4 is establishing a trigger. And step 5 is an entry method. Just because you have a trend, for instance, in play, doesn't mean you want to trade necessarily with it or even against it. Of course, logically at any point, because just because there's a trend doesn't mean anything. It's good to know. But that's why we have various steps that filter whether there's basically a trade setup or an actual trade eventually. Once anyone would enter, of course, then the next step is the trade management plan. This is planning the trade. The trade management plan is trading the plan. That's the difference. And of course, then we need trading psychology to be able to implement the plan as planned. So that's how they all fit together. This is the kind of like the checklist prior to trading. Then we have the trade management and trading psychology after that. Tools we use to identify these 5 steps are moving averages, trend lines, fibs most primarily, and the awesome oscillator, for instance, fractals, etc. So last week we had actually the NFP, of course. A bit of a mixed result there. A lot of volatility connected to it. We had Eurozone news. And, well, at the end of the day, let's take a look what price action is telling us through its communication, and it's basically its price action. It's communicating with us what kind of direction we might have. Today we have trading confluences on multiple time frames. But I wanted to actually take a look at the calendar here. We have pound news an hour 42 minutes from now, so that's something to be aware of. Alrighty, let's take a look at the euro dollar as always. Let's see this 4-hour chart. So, or let's zoom in and take a look what happened after the NFP together. Friday is 4th of April. That was basically here at the bottom. We had a lot of ups, down, up, down, up, down, up. So a lot of volatility within these 3 hours. You can look at the hourly bar and you already know that, boy, oh boy, was this a lot of spikes up and down, all within a reasonably tight range of about 60 pips, which is not a lot for an NFP, but still there was a lot of volatility, obviously, with that. Yesterday was an up day. But that was a retracement. Why? Because price is going back to the moving averages, right? So that was a retracement day. Sometimes it happens. Yesterday's trend was up. The daily intraday trend was up. Doesn't mean, though, that the long-term trend was up, right? Because look at the moving averages. They're all pointed down, right? The price is going back to them. Classical retracement. But on a 50-minute chart, we can see that the day was up. Price was above the 34 EMA band and stayed above it. The intraday flow was up yesterday. All right, so what is the intraday flow today? We don't know because the day just started. Moving averages are flat, and price is stuck between the long-term and the intermediate one. So between the long and the medium. All right, I'll call them short, medium, and long. So there's no real guidance as yet, as we can see. But we can take a look at on the 15. Maybe something like this could happen today. Either price breaks below the 15, this 34 EMA, and bounces back again off of it, or breaks below it and uses a retracement, whatever happens, that could give an idea of today's intraday direction. For the long-term picture, though, let's take a look at the 4-hour chart. 4-hour chart, you can see, is being squeezed in between two moving averages, and the 34 EMA band here is flat. So Eurodollar is quite in a messy situation. We have a resistance line like this and a support line like this, which looks to be a bit like a channel to the downside. And that particular channel, of course, is within an uptrend. If you look at the daily chart, what do we see here? Everything is aligned to the bullish side. So if we put a fib from the last swing low to the last swing high, we can see price was pretty close to the 61.8. It just missed it by a few pips, but it did stop at the 23.6, it did stop at the 38.2, did stop at the 50 fib, and was very close to the 61.8 fib. So despite the hourly downtrend and the 4-hour retracement, it's all within an uptrend on the daily. So this could just be a retracement for more upside, and this could have been a 61.8 bounce. How do we get a confirmation of such analysis? The confirmation will be obviously a break above this downtrend channel. And then we have a bullish breakout on the daily chart, right? That's what we're looking for regarding the long term, a breakout to the downside, to the upside. If price doesn't break to the upside, then basically we would at least need to break 61.8 fib for more interesting shorts. I mean, looking at from a swing trade perspective. There could be intraday short maybe, but we have to be aware that the 61.8 is still liable, is still a potential support level that could kick into the market as we speak. So although there could be some intraday shorts, be careful of 136.64, okay, because that could be a bouncing spot. Let's take a look at what the Camarilla is telling us. If I can find it, that's strange. This is not what I want. Here. So we have L4 short breakout indeed below. For the moment, though, there's a pivot in L3 at 137.20. That's why I said be careful with shorts at the moment. But if we get enough space, if we get enough momentum below 137.20, we could see further extensions down, which makes sense. H4, basically, it's the long breakout. That's where we can expect some acceleration. To the H5, for instance, makes sense too. Alrighty. So let's take a look at the pound dollar now. Let's take a look at the Aussie, because I find the Aussie pretty interesting. The Aussie, everything is aligned here. You can see everything is bullishly aligned. So this was a potential opportunity here as price dips below the 34 band, and when it broke above, it's actually an opportunity to continue with the trend. If we zoom into the hourly chart, we can see that today we had here the breakout on Friday. That was during NFP, in fact, the breakout of this trend line. That was a good breakout trade. This was the hook back to the 50 fib. If we fib this last part up here like this, had a 50% hook back, and now we're again bouncing above the moving averages and steaming forward. So that was an interesting breakout. So maybe some of you took that trade. Let me actually open the question box because I don't see any of your comments here. 1 second. You try to find it first. Let's see. Okay. No further questions. I see from a question from Mike. Let's see. I wrote you back, Mike, by the way. Did you see my email? Michael? I I sent it yesterday. Let me know if you got that email, okay? Regarding, because I don't know how to install it on the new MT4 somehow, I think it's best to write customer service. That was the email about. Let me know if you got it. So that was a good breakout, and you can see what it basically all has. If you're doubting about the momentum, what you always can do is add for instance, an 8th EMA close. And when the 8th EMA, for instance, is being pulled back into the direction here on a lower time frame, like the 15 or 30-minute chart, for instance, then we know that we're back into trending mode, right? Because the momentum is pulling the moving averages apart here. So this is a typical example of the 50-minute trending mode example, right? And it starts to accelerate. So any buy in here or upon the break of a fractal, etc., makes sense. Because you're not trading the 15, you're trading the higher time frame breakout, right? So that all makes sense. So maybe some of you took the Aussie already earlier today, because now prices already moved a lot. Now it's a bit late, isn't it? There's nothing we can do about it. Hunting kind of like for the particular setup and waiting for the setup to come to you is part of the deal, is part of trading. But once the trade then moves away from a particular retracement zone, then there's nothing else to do than wait for a new retracement or try to take a reversal signal trade, right? A reversal pattern, because the with the trend trade is already gone, at least on the 50-minute chart. There's a big, massive bullish candle. The only thing maybe what could be done is waiting for a new smaller retracement on the 5 maybe, for instance. But this is just pushing away. So any trade in here requires a massive risk, and the reward potential is limited, because we rather, we would expect at some point a retracement first. All right, but that was a good setup, a good example of this morning though. Let's take a look at Kiwi. Kiwi also had the same example here. Kiwi broke out as well. We can see price retraced, pushed back above, and is now breaking. Classical example of the trend, everything is lined up. Here too, the break is happening as we speak, so that was already this morning again. Once again, a trade for this morning. All right, but at least you see some examples of recent trades. Unfortunately, they didn't happen right in this, within our room, but these are, if you use 1 hour, 4 hour charts, you need to, you just don't have every single point and every single minute, of course, something that breaks like this. So you got to be lucky that it happens kind of in the room itself, and this one happened before that. Pound dollar is a bit more mixture, right? It's a bit more messy. And we can see the price is at a resistance line as we speak, right here. So a break above that would mean the continuation of the uptrend. All right, because we had a 61.8 fib bounce here, as we know, and we had a 61.8 bounce here. So they were all 61.8 bounces. Now let's see if we get the follow through to the upside from a daily chart, for instance. We're definitely in uptrend mode, right? All of these were dips. This could be a dip as well, by the way, right? And you see definitely everything is up gear here. For our chart 2, one second. There it is. For our chart, you can see the long-term moving average still pointed up, price still above it. However, most recently, of course, there's a lot of mixture here. There's no clear trend in this part. This is a retracement, of course. So we have an uptrend, but price is retracing and making some kind of a correction as we speak. So when would the correction end? The correction could end as soon as we break this resistance line, right? That could be the signal of uptrend. And you can see pound dollar is already actually, as we speak, on the 50-minute chart, is actually above the moving averages, right? And using moving averages as a bullish bounce. So yesterday we had a bullish day as well. And in the meantime, we're getting a follow-through of yesterday's bullish day, and pretty strong follow-through, in fact. London just opened, and there's a lot of dollar weakness apparently at the moment. 25 pips up just prior to London Open. Not too bad. It's already quite a lot of movement, in fact, for such a early start. So with that said, looking at the pound and odd USD, it looks more like dollar weakness. Let's see what the euro is doing. Euro is following the least, so euro seems to be the weakest among the pound and Aussie compared to the dollar. So maybe the pound and the odd USD could be the better ones to keep an eye on. Basic retracements to the downside. Preferably break this trend line, give a retracement, and make a bounce. That would be an early breakout, don't forget, because this is a major resistance line. So a better breakout could be even on the hourly chart and the hourly hook back and then bounce. That could be a bit more sustainable breakout, because one of the risks of taking a breakout here is that it just goes a bit before you get a retracement. You don't want to avoid trying to go long upon the break here and then seeing a bigger retracement go against you and then the bounce. So that could be, basically depends what time frame you use. I mean, if you use the hourly, you just wait for hourly hook back. If you use the 15, then you want to look for the 15-minute hook back. After the break. So looking like a lot of dollar weakness at the moment. Let's take a look at something else. I think considering the euro weakness, we definitely should take a look at euro odd and euro New Zealand. Those have been trending nicely as well, and we can see already the odd and New Zealand having a lot of strength. So let's take a look at the crosses from the euro and pound versus the odd and New Zealand. Those could be trending a lot, so let's take a look. And what we see here is again a breakout scenario. Price pushing through the moving averages here after a sturdy retracement to the 50 fib on the pound odd, which was already a level that was a good discount there for anyone who wanted to join the pound odd there. This was already a strong break. The hook back to the 50 seemed the most maximum possible, and we broke back below the moving averages, now having a breakout trade to the downside. That occurred also kind of a few hours ago. Euro odd 2, basically. Also here, moving down up to 50 fib. Maybe some of you took this breakout trade right in here, the break of this black line. That was a good fall. That had a retracement to the 61.8, actually, the euro odd, and now moving down below. Pound New Zealand, same story. Actually, I was hoping for the 50 fib, didn't get there, went to the 38.2, and is breaking below. I did take the euro New Zealand on a different account though, right upon, actually, let me take a look. Right here, in fact, at this retracement, I didn't see the 38.2 being broken. It seemed like we had already resistance, plus we had 1, 2, 3, 4, 5, sixth candle not breaking this top. Although I had a pending order on this account at this level, on another account I took it right in here. Still with the stop loss here though, because of the fact that this up move seemed over due to the time factor, and I expected a breakdown and didn't wait for the confirmation. The confirmation would be, of course, a break below the trend line here, for instance, like this. That would have been a confirmation, or a break below the fractals, or even a close below the band. Those would be confirmations. But I took it a bit earlier, and let me take a look. Up 101 pips at the moment. So that's already a gigantic trade. The risk was already reduced almost quite soon because of the fact that we already have an hourly top here, so as soon as this broke down, I can move my stop. Just a small risk left on it. Sooner or later, this is going to get a new high, and I'll chill stop that, right? I'll chill stop that particular new high, etc. And I'll keep in this trade. I don't have a TP. I'm just trail stopping it, basically. Every new hourly top, I will trail stop by 15 pips. All right, so looking good, like a good breakout trade on the New Zealand. So basically, all that is left is to zoom into lower time frames and try to scale in some positions. If you're not in those positions, not in those breakout trades, then on the hourly, you just missed the boat, and there's nothing you can do about it. You can't turn back time. You just need to wait for a new opportunity. That means no pullback to the moving averages, or a reversal trade. But those reversal trades are very risky because price doesn't have to make a reversal necessarily at the spot you made it think of it. You could look for price action signals that indicate the end. For the moment, I wouldn't be looking for it. It looks like it's continuing with its bearish momentum. The other thing that could be remaining is zooming into 50-minute chart, right, and trying to scale in continuation trades, right? But even here, we can see price is very far from the moving averages, which means we don't have a retracement as yet. 5-minute chart, 2, right? So could this go down still another 15 pips? Sure. Could it go down another 25? Sure. What is the chance? I don't know. I really don't know what the chances of that going down a lot or a bit or more. Maybe some of you have stats on that. It's not something I've ever trained or practiced to jump in when the prices are so far from the moving averages, personally. So I don't know. I'm not trading this part. I'm either holding on to a trade that I'm already in, or I'm waiting. If I'm trading the 5 or 15, what I would like to see at least is price go back to the short-term moving average, right, at minimum. And I would also like to see this go back to the 0 line, so that I know that the retracement is finished and we can still see one more fall, for instance. Now I know that one more fall, I need to take my profit. In this particular trade, I do need to take TPs. I need to use TPs with the 5-minute that breaks that downside after a big move down, because when you catch the next move down, I mean, it's not going to move another 200 pips on the 5-minute charts, right? What you'll often see is a retracement, a bounce, and continue, and eventually we'll see then a bigger retracement happen, and then we could see another bounce and continue. That means I want to take this first red spot before it makes a bigger retracement against me. So that's why a TP on the 5 and 15 would be definitely necessary. If you position yourself early, like on the hourly chart, and you're kind of like stepping in relatively very early, I mean, the earliest is the 38.2 fib, like directly, right? But if not that, then the second earliest would be just below that, right? Just below that, after the confirmation of the 38.2 fib, like 5 candles, 1, 2, 3, 4, 5, like I did here, or below the moving averages. Now, the further, of course, the worse price we get, but the more confirmation we have. So you can imagine, let's say, on this hourly chart, this does retrace a bit like this on the 5-minute chart. No, the other way around. This retraces a bit like this on the 5-minute chart, right? And then falls to the minus 272. Then makes a bounce up again to the 50. Then moves down again to the minus 618. Let's say this path happens, okay, for the moment. So what piece is tradable on the 5 and 15-minute chart? Obviously, we need a TP that's geared toward this minus 272 target, because the next blue retracement, we have the blue arrow, could go way past our stop loss and blow out our basically the whole trade idea, right? Still could be a good short somewhere in here, right, for one more downside depending on circumstances, but we want to take the smaller profit here. However, if you take it here or here, right, you can basically allow yourself to live through that pullback in some cases and get the next follow through. In some cases not, it depends. Obviously, if we get, for instance, if we get, depending on how big this pullback is, right, depends if we get a fractal here. If we do get a fractal, then I would move the trail stop loss. But if we don't, and we get something like this, and we still get followed through without the fractal, then the next move up, we'll see again a move down, and I'll move the stop loss to above this top. And then you can hang in there for the next ride, hopefully. If not, then no harm lost, still some profit locked in. So that's the whole idea. So that's why the trail stop loss is okay for the hourly in this case, but it wouldn't be okay for the 5-minute hook back and continue. Then we need to use a TP. Then we need to have sufficient R2R as well to the next target. And we need to wait for a pullback here. Now I guess in theory one could have even traded these retracements of these hourly candles, because every candle has lower highs and lower lows almost. That would be almost the only way I can imagine trading something like that. Is wait for a retracement of a candle and put the stop loss above the candle. If you're not, for instance, if you're late into the party and you don't see this, and you don't see this, and you don't take the fractal break here, for instance, but you see an hourly candle like that, and you see retracement of the hourly candle, that could probably be the only way still to kind of join it. Let me take a look later on. Yeah, that was a retracement here. Actually almost went back to the moving average, right? What did I say? I want to see it move back to the moving averages and the arrow to the 0 line on the 5-minute, right? So that happened here, didn't it? What happened here? Price went back to the moving average and went back to the 0 line. The ideal retracement. If you didn't catch this one, if you didn't catch the first break, if you didn't catch the retracement here, the move here, or the fractal break here, or the trend line break there, then this would be the 5-minute hook back. Alrighty. Enough said, I guess, about this. But as you can understand, there's, other than that, nothing to discuss on all of these euro odd, pound odd, and pound New Zealand trades at the moment. Let me just take a quick peek at the 4-hour chart here. Good, you can see everything is aligned. Good. You can see that the band is a resistance as well, isn't it? Look, see? Very useful info there. So let's take a look at something else. Pound dollar we discussed. Let's take a look at the dollar yen. Dollar yen, not so interesting at the moment. It's just very choppy. It tried to escape, and it did for a while. Now really drastically going back to the moving averages. Drastic return to the averages, indicating not really a lot of strength, not sufficient strength for this to maybe continue. If we would have made some kind of bull flag pattern, for instance, fine. We could have maybe seen continuation of the trend to the upside, but it didn't. So the dollar yen and the yen pair, yen currency, is not really in a trending mode, in my opinion here. I was already skeptical of the trend because of the fact that we had a first breakout here, which means that we don't know if it's sustainable or if we get something like this. If it would have been sustainable, we would have seen an upside followed by some smaller correction like that. Support and resistance would have been eventually used as a bouncing spot. That didn't happen. Actually, we had more of an impulse down, which means that actually a bit more or less, it's just less interesting at the moment. No, not worth the attention in my opinion. That holds true actually for all of these yens at the moment. It's just maybe the New Zealand yen is the only difference here because it actually made such a smaller correction like that. So the New Zealand yen, maybe the breakout here could be interesting. That's the only one actually, and the odd yen. All right, because basically because we have euro and pound weakness and dollar weakness, so we see that weakness against the yen. But the New Zealand and Aussie are relatively strong, and we can see that they're holding their heads up pretty well against the yen. So relatively speaking, if any yen is interesting, it's the New Zealand and Aussie yen. And that makes sense. We're about to push through actually on this Aussie yen. Looking for a breakout here above as we speak. New Zealand yen as well, same thing, right? Everything is aligned. Price is trying to break above the short-term one after retracement. So these look like good breakout trades, to be honest, to the upside. Swiss yen is also less appealing. Aussie CAD is trying again to break to the upside. It's the only CAD that seems interesting because of the Aussie, of course. New Zealand Swissy as well, just like the odd Swissy. They're all teaming with the upside momentum. Yeah, that's basically the main story, I would say, for today. Is just the odd and New Zealand strength versus the dollar, euro, and pound, and even yen. And well, what's stronger, the pound or yen? At the moment, it's the yen. So therefore, or the euro yen. At the moment, it's the yen, which means basically that the euro odd and pound odd trades in the euro New Zealand probably is the best. The euro New Zealand probably is the best one because New Zealand is relatively the strongest of them all. Why? Because if you look at the odd New Zealand, price has been moving down, although we are at a bouncing spot, so there could be some odd recovery against New Zealand here. The euro seems to be the weakest against all of them. No, the dollar actually, sorry. The dollar seems to be the weakest, so actually it's the New Zealand dollar that has the best papers at the moment. That seems to be the cross that has the strongest pair and the weakest pair at the moment, relatively if you look across the board here. So that's pretty interesting. Now this is, basically the main bulk. You can actually consider this, the analysis already completed with moving averages. I mean, that's it. Now it's just waiting for, it's waiting for setups to arrive on the lower time frames because on the hourly everything is broken out, as I already said. What can we do? Sometimes it can go that fast with moving averages. It doesn't have to be, always very long or complicated. Today was relatively fast. We looked at all, I guess, 15 pairs we look at within 35 minutes. It wasn't too long. We can now, what I maybe wanted to share with you is something else. We have a lot of moving averages on our chart, but it doesn't have to be that complicated sometimes. If you want to take it a bit, make it a bit easier on yourself with regard to moving averages, start maybe a bit simpler. It is possible to do that. What we can do is, for instance, let me take off all of them except one. Now, you do need to be a bit more experienced maybe in understanding what the trend is, but even using just one moving average like this, for instance, on the hourly, we can see that price was obviously making a retracement like that. Just by looking at the angle, we can see price is not too steeply angled. It's quite corrective, especially, of course, if you look at this. This had a steep angle, shallow angle, shallow, shallow, steeper, and when you have that, when you have a steeper one like this and you get a pullback and price breaks above it again, that's when you could expect a continuation. So I took on another account also along on the USD in here this morning, just like the Euro New Zealand yesterday, right? So basically you can use the angle of one moving average. It's more difficult because it requires a little bit more understanding of market structure without seeing the extra info maybe. But just looking at if price is above it and hooking back to it and bouncing off it if the angle is there or if it's flat. And looking at other things like trend breakouts, for instance, or falling wedges like this, and breakouts of falling wedges with impulse, and then move back to the 50 fib, and then bounce off the 50 fib, and then break above the moving average. Even if you make it as simple as that, you could already just use one moving average as a great guideline. If you think that the number of moving averages we look at now is on the high side, if that's too confusing, potentially, then using just a simple one already in combination with other factors that you might look at gives great value and great potential to use that. Let's zoom in now to this hourly, and you can see with this particular power bar we push through the moving average, right? So that's basically when you're getting the kind of like the price action signal with a good bullish close near the high that we're actually breaking above the moving averages again. We also broke above this resistance. Right, so this correction is then most likely over. We had 1, 2, 3, 4, 5th candle already, not breaking this low, so there's already a decent chance that could be a bottom. But especially if we break above this top, local top, then you get that follow through. If you want to see, for instance, a bit more how the momentum is, one could use, for instance, an 8 moving average, like this. And we can see that here the moving averages are being torn apart. So there's momentum. 8 is well above the 34, for instance. So there's momentum to that upside, right? Just like there was here as well. It's kind of like a alligator mouth, right? You see that? Alligator mouth. Alligator mouth. And here the alligator mouth is snapping back. Boom. Closing the gap and closing the momentum. Opening the momentum. Closing the momentum. Opening the momentum, right? Etc. Here on the 15 we see that good as well. But then you already have 2 EMAs. I mean, depends on your own preference how much you want on the chart, right? If you don't want both, what you can even do is put on the 21, maybe something in the middle. Actually, to be honest, there are so many combinations possible that are valid and useful. It just depends how you interpret that information. That's all. And if the more you have kind of experience with one set or combination of moving averages, the more value that it gives, of course. But here you can even see on the 21, for instance, that price was below it. It was a weak angle, so that was a retracement. And here we can see good angle to the moving average, price was above it, and every time it dipped down to the moving average, it bounced, it bounced, it bounced, it bounced, it bounced, it bounced, right? Using as support. Here we broke below it, then the moving average started to be used as resistance, right? Until we broke back above it, and we had some uprun, then we broke back below it again, then we used it as resistance here, a bit of choppiness here, that can happen, of course, and then we broke above it again. Now this is corrective. If you have doubt about it, take a look at the 4-hour chart, and you see that the 21 here is still pointed up or flat. Therefore, the breakdown, for instance, here is correction. And the fact that price is below it means more of correction than any trending mode, right? Just if you want to use only one moving average, I would recommend probably 21. I think it's kind of like good for a single use because it's close to, not too far away from price, but not too close to price. So it has kind of like the momentum in it, but also the trend levels in it. So if you really only want one and not more, then I'll probably use 21. I had to choose. Of course, the fib number, logically, that's my main attention here. My main focus always, most of the time, with regard to moving averages. So let's talk about other things now. I think we talked about enough about moving averages the last 2 weeks as well. So what else can we use for Confluence regarding time frames? We can use, of course, fibs, as I said, right? Trend channels and trend lines on multiple time frames. So for instance, looking at this 4-hour chart, we can see here in this case a very nice channel, right? We could put it here, we could put it higher, roughly anywhere here. This is an uptrend channel, and it's a good uptrend channel, has a good harmony, has a good angle, perfect. If we look at this daily chart, one thing we should be aware of is, for instance, a resistance spot on the 61.8. We're getting pretty close to that, actually, the 93.40. Will that be resistance? We would know. We will find out soon enough. Could it go 30 pips above that? Sure, it can. It's a daily fib. It doesn't mean that it will stop necessarily right at 93.40. It could even go to 94 potentially before actually 61.8 gets respected. All right, just look at here. There are some examples in any case, not in this case, but where price does respect the fibs. We're not just immediately on the pip, but we are getting into a spot that could be a resistance spot. After a pause and then a break, continuation break, then the 78.6 becomes the target, and that could be the level to look for regarding the upside. Even on the daily chart, though, we see higher highs and higher lows. That's Confluence. That's confirming the trend, both on the 4-hour chart and now on the daily, as we can see. Let's see. We don't. The only thing about that divergence is that we don't know how far this can go. This could still continue. I don't know how far because it's still growing, right? So it's a good question, by the way, for those who don't know why I'm answering this. Jocelyn is asking, there's divergence in the Aussie 1-hour, 4-hour chart. Can we expect for the counter trend to the downside? So what I wanted to say is that this is just, we don't know how far it can go. And what I would be waiting for is this to top out and then move down again. And when we have like 3 bars that are red, or when we move up again, then we know that this upside is over. And then we have confirmed divergence. Because of the fact that then this, kind of this hump, this top is finished. Let me show an example in the past, maybe it's better. Let's see, we need a break of a top first of all, which has divergence to show. Here, for instance, let's take a look at this example. Here, if we look at price here, we're breaking the top, right? Price breaks this top. These tops. This double top. Why is it double top? Because this high is only 5 pips higher than this high. Anything lower than 15 or lower in pips is double top. So the fact that this is 5 pips higher than the previous top doesn't mean it's a new high. It's double top. So basically what happens is that when price pushes through it again, we actually have divergence, don't we, here? It's low. But what happens? If we would have considered that divergence, we would be looking for retracement trades in here, wouldn't we? But look how it continues up and up and up and up and up and up and up, and makes a retracement and continues up and up and up. No retracement, no reversal trade would have had any success with it. And that's because this just started. It wasn't finished yet. And in retrospect, we see that it's kind of like, it may be slight divergence, but it's equal to each other. It's definitely not a higher, lower high here. It's equal. So only when we have 3 bars, negative bars, can we say, okay, this hump is finished. That would have been here. Here. Then we know that, okay, there's a decent chance that this uprun is probably finished, but we don't have heavy divergence. We have maybe minor divergence at best because it's equal, and we do get not a big retracement, or not even a big no reversal, not even a big retracement. Let's take a look at another example. Here too, we break this top, right? But it's kind of like equal to each other. We do get a pretty strong retracement here, that's true, but I want a bit better example. Here we have divergence. We have a move down, a move up, and we go down, 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 down. But where does it stop? Where does it stop? We don't know, right? Because upon the break here, we already have divergence immediately when we break this bottom. Does it mean that the currency flies back up immediately when it just broke 20 pips? No, because it did go up, down for a decent run, didn't it? It still went down for another 110 pips. So what we're looking for, 3 green bars. 3 green bars. That's the confirmation here. Right? So then we know that this is indeed finished and we have divergence. All right, so there's still a small trade maybe up here before you get a bigger consolidation, and then the divergence kicks in and we get a bigger move up. Actually, that's a bigger retracement in fact. Let's see. Here we have 3 bars, right? So then we know that this is potential double bottom here. And we have divergence, so you have a small retracement trade there before it still continues down. Here, for instance, we find out that this is the opposite. We actually find out that we don't have divergence, do we? We have convergence. Although at the time we broke the bottom, we had divergence, didn't we? But actually the downside was so powerful that we didn't have it, right? So, and then we still got some follow through down. So, good. I think you get the point. It's a great question, in fact. It's one that actually we hardly discussed ever since I started webinars. So, bonus points for Jocelyn, because when does divergence really start? I mean, we can see it, but when is it really effective? So that's a great question, actually. So we need, any reversal traders definitely need to sit on the sidelines, still have to wait for that confirmation of divergence. And for me, if I see it and I'm in the long here, then that would be reason for me to be cautious of my long and to exit that. Right? I would be looking for the opposite. For those who are not in the long, you might be looking for a reversal trade, and for those who trade reversals, obviously. So, yeah, that was a good one because that's not always indeed clear. Let's see. Does anyone have a particular favorite currency pair? I mean, we talked about all of them, so it's just for looking for Confluence and other things we can look at together. Which pair would you like to see? Dollar CAD? Sure. Let's take a look at the dollar CAD and then the euro dollar. Got some trend lines here. Those are old. Let me take it away. Yeah, we didn't look at the dollar CAD. You're right, actually. So we had a chart pattern here, didn't we? Orange lines are maybe not the best to see, but maybe here we can see it a bit better. We had this particular pattern that Wei already actually warned us of happening right in here, right? And it lasted for quite a while. Top got hit, bottom got hit, moved up to the top, then went down to the bottom. Well, it's not as perfect as always. Not always is there a perfect touch, but roughly speaking, we had this triangle, contracting triangle, although one could even call it maybe just. So it's a close one. The bottom is just not flat enough, maybe to call it a ascending triangle, because look, just a slight difference here. It's very close to ascending triangle. Otherwise, it's a contracting triangle. Anyhow, just a small difference in words there. It's a triangle in any case, and the triangle did get broken to the downside, and well, it definitely caught me by surprise. This cat strength, and not that I had anything really to lose of it, luckily, because I got out here. As soon as this triangle didn't break to the upside, I found that quite suspicious, because we had this triangle in play, right in here. So what I was expecting was a break, pull back, and go. When we didn't get to go. Sorry, I'm mixing up my words here, and we got a break to the downside. I found that already very suspicious, because that should go up to the upside. Failure to continue there, strange. So good, I thought that, because I limited the risk by that, and we got a very strong downside, stronger than I expected. I was actually definitely expecting some bounces here, which didn't happen. And that's the advantage of waiting for confirmation and not anticipating something, because someone who anticipates something gets in trouble here. One who waits for confirmation doesn't, right? So potential longs here, no loss, or hardly any loss, because of the small stop loss. And anyone who took a short on the opposite side is doing well now. And we did get a break of this triangle to the downside. So looking quite bearish at the moment, and continue with that bearishness. Which means that basically, now that we've had this upside here, we remained above the moving averages for quite long. With this break below this triangle, we got space down to these moving averages, for instance. Let me take off the moving averages for a second. 1 second. Let me go here. And only use the 20 EMA, because I want to look at it from a different perspective, so I don't bother you with all the EMAs all the time. Let me go to the 21 here. All right, so we just use the 21 EMA now. We can see the price wasn't an uptrend as we spoke about, continued still, but now it's breaking below it. So how far can this fall, basically? Let's look at some Confluence ideas. First of all, we could put a fib on this downside here like that. And we can see we had a very shallow retracement. That was a very shallow one, in fact. Makes you wonder if it wasn't part of the 1 hour chart still. Let's take a look at the fibs. What I'm doing is from fib retracement to fib target. We can see we have a lot of breakout trades to the downside. Wow. The fibs are to the downside a bit difficult because of the massive downfall here. We probably could still fib the upside here some ways. The natural swing high, swing low that's still left is this one. So the next support level could be the 61.8 here at 108.30, right? Because the 50 fib got respected, the 38.2 as well. And you always want to check your fibs if they get respected by price. If price actually stops at them, is price using that fib? That's always a good sign. You probably also want to take it from retracement to target, and not you don't want to fib too many times in this mess, because that's when the fibs don't do too well. But you do want to use the fibs in this trending mode, within this move. Now we're actually putting a fib on the entire swing high, swing low. Just actually, when you do that, that's not necessarily for an entry, but more for what is the next potential support or resistance, more for what could be the target when trading this to the downside. When you use fibs on smaller time frames within this zone, then you're looking for more active entries and exits, right? Let's take a look maybe at that particular part. Right, so if you start, sometimes, you know, these things break so much that you can't even put a fib. It's just breakout trades after breakout trades. Here we got an 886 fib bounce. That could have been one. But after that, you see that this one is difficult. Because it didn't go to target as yet, so I wouldn't fib this. After that, you can see it just keeps on going, keeps on going. So that's, then you need to know how to breakout trade, because otherwise, if you wait for the fib retracement, it just doesn't happen. It just doesn't happen. Sometimes that just can happen. You see here, if we move it from this retracement to next target, it just keeps on breaking. We hit another target. This one, if we take it from target, roughly from target to, from retracement to target, you can see that it's a 382. Then we hit the minus 618. Then we can move it again from retracement to target. And then we have another 886 point fib. Right? So that would have been a good fib right there. That's a deep one. This one was a 38.2. We go to minus 272 and then to minus 618 target, so we can fib again. 38.2, go to target, we can fib again. From retracement to target. 618 fib, and here we have failure. We hit minus 272, not failure, but we hit the minus 272, and don't get followed through. So that means that that particular upside is over. Eventually it won't continue forever, will it? And we get a bigger retracement. What that means on the 4-hour chart basically was this. We had this tremendous upside, but we get a bigger retracement here before we move up, and then a bigger retracement again, etc. So hopefully you found that interesting. But in any case, back to the daily chart, you can see that that would be the next support, so that level here. Obviously the 78.6 fib has tops in here as well. Could be a major spot. This bottom here, we have prior moving averages, of course, etc. The usual works that could be there. We have these tops in here. All that is extra confluence. Obviously, just because those levels are there doesn't mean that price will stop there. We still could look for price action signals at those levels to get an idea that that could be happening. For the moment, though, price is looking downwards for space down to that level, right? So for the moment, if you look at the hourly, what are we looking for? Downside, right? At the moment. We broke this triangle already. And we broke it, hooked back to a fib, 61.8, as we can see here. Depending on how you fib it, it could have been a 38.2 as well. I think we need to check this downside to know what's the best fib. Give me just a second. Okay, so we're still in this fib, to be honest. So minus 618 is close by. We should be roughly stopping probably at this level. What I would expect is some smaller pips down here, a bounce at this fib, and then one could actually fib from this top to the new bottom. Let me make it a bit different color. And when we bounce here, we should see, a move to any of these fibs, in fact, and then one more move down to the 108. Look at the confluence here. A hit on this level, and a bounce to the 50 fib, for instance, and then we can see maybe follow through to the next support level, which is the red line there. So something like this is what I would expect when looking at the fibs. Something like this. Now, which fib it will be is difficult. That's why waiting for some candlestick pattern confirmations at one of these fibs is good, because it could be any of those. So that's the dollar CAD. Let's take a look for the fun of it at the euro dollar is indeed pushing up. Following the pound example, euro had a hesitant start, but now following it. And I think we're probably getting some retracement on the euro New Zealand as we speak. You see, price already moved up to the band. And what did I tell you? When we were looking at here, was it worth the long? No, because this is a big down move. So that's a retracement in my opinion. But it was definitely not worth the short either, because we were at the bottom, right? When we were looking at this, what time was it? Yeah, about 50 minutes ago. Well, it didn't go anywhere after that, right? Just a few pips maybe, as I said. 10 pips before it starts to retrace. So why take a short in here if you expect to retrace? Now you can take a short. That makes more sense than taking it here. The balance is a lot better. Now, is it ideal? I don't know, not necessarily. We're still not back at the zero line, what I would like to see. We are back at the band, but I would want to see a bit more confirmation, because this could be a three-wave as well, although I doubt it necessarily, but could be. So I want to give it a bit more information. Probably we'll just push up a bit and find some exhaustion here, I would say. But I'd rather wait for the exhaustion to happen than take it here. Although, yeah, just because it's make a run up doesn't mean it has to be over. It can still push a few pips, make this, and then die down, and then there's more likelihood of falling. So, do you have any questions, by the way? We'll take a look at the euro dollar now, and after that, I guess we'll probably wrap it up. So, now's your moment. Now would be the good time to ask questions, if you like. If you have anything regarding things discussed throughout this last hour and plus. Euro dollar 50-minute chart. Let's take a look at the same template here. Make it a bit easier to visually watch. Well, we talked already about the fact that we're an uptrend on the weekly, right? And the downtrend, an uptrend on the daily. The fact that price could have stopped at the 61.8 here. That price is in this upward motion. Any time of these dips, we do find buyers. That could happen here again. So if we look at the channel, when we have a channel like this, price is pretty close to the bottom of that channel, as we can see, and this could be a hook back for more. Now, how do we know that? Basically, we want to see price breaking above here, right? Breaking above this resistance, and we know that there's a good chance of that. We're getting already in an upward motion actually as we speak, because price is remaining using this moving average as a support level, which is important to see that we're getting a bounce, in fact. Right? This morning we didn't know. Would it break down or would it bounce? We're bouncing. And any hook back could be good intraday longs. We are close to resistance line, but if the intraday flow is up, then I think that would be a good chance of a break. Well, that's what we're getting close to. We're getting close to breaking. Right now, it's not so interesting because we are still close to that resistance line, mind you. So what we want to see is a bit of retracement at least to get some better, position sales are a bit better, because if we do that here, pretty close to resistance, you want to wait either for the pullback or the break and pullback. And then we could see a breakout basically on the daily chart and the 4-hour chart here. And the hourly is already getting into more of an upside mode, right? This is a strong hourly candle. 9 minutes to go before it closes. 15 is already showing that upside. Continuation of yesterday. What happens if we do break to the upside? Well, then basically my bullish view is then confirmed, because I still see this as a bullish trend. Looking at the trend channel, I knew that we could get a retracement. The retracement was a bit stronger than expected, maybe, although, well, not sure about that. Expected some kind of downside. Maybe not to the 61.8, but that's fine. And then we would get indeed the breakout again, like we've had previously on the euro-dollar. This is just a retracement. So many times have people been trying to trade the retracement, the reversal down in the euro-dollar, and it hasn't happened yet. So you can imagine how frustrating, I can't imagine how frustrating it must be to wait for the break of this channel to the downside and keep trying to trade that, and it doesn't keep happening. I mean, how long do you want to wait for that? I mean, it's already like a year in this channel. I mean, I don't have that patience to wait for that, personally. Not many of you probably have as well. So this could have been another retracement, and if we break that black trend line, there's a good chance that it's proving that. Now the upside isn't too fast either. So when we get the retracement, we do move up, and then we find resistance. We do move up, and we find resistance. So maybe next time that will change. Why would it change? Well, let's take a look at this fib here. And you can see if we zoom in, that price stopped at the 38.2 fib and the 61.8, and then it broke above it. So when the next break, I would think that there's more probably, I would expect a bit more speed up to the 78.6. Will that be true? I don't know. It's always difficult to know how much momentum a currency could get, but that could be the breakout scenario. If we break above the black trend line, we could go up to the 70.86 to 143. There is, of course, that resistance here, the daily fractal we have to be aware of. The weekly actually fractal already at 139.60ish, right? I think it is. Let me check. Of course, that is an important point we must not underestimate. The high of that candle is 139.66. 139.66. So obviously that's still a resistance spot. After that, though, 140 and then up to 143 to 78.6. It will have its ups and downs. Not to say that it's going to skyrocket without any waves, moves, legs, swing highs, swing lows that retrace each other. But ultimately, I think that we could see that target. Now, I'm flexible. I really don't have any emotional attachment to that analysis. If it doesn't go up there and we fail at double top and we start to move down and break this trend channel, hey, I don't care. Fine by me. We can trade it to the downside. It has nothing to do with thoughts or what I hope or what I think. It's just I'm just interpreting what I think the charts are telling me, at least. Otherwise, I really don't care. I mean, for my personal trading, let me say it this way. Whether the euro dollar is 137.60 or whether it's 136.60, obviously, or if it moves up to the 78.6, it's just analysis. Alrighty, folks. Well, let me know what your questions are, if you have any. Otherwise, take a look at webinars tomorrow. We have Fibonacci trading. We talked about Fibonacci already today, but we can dive into it a bit more. How to trade it, where the stop loss is, TPs, when to do it, when to trade it, how to fib the swing high, swing low, more detail if you like. What environment are we looking for? Then we have in the evening, tomorrow evening, expert opinion, Renko range bars part 2. Thursday, our live trading lab is scaling in, scaling out, and then Thursday evening we have understanding the market structure. I would definitely recommend that. That's just, it isn't the strategy as is, but just understanding what the market is doing and why, and understanding its communication is, I think, vital to grow as a trader. The better, basically, you understand the language of the market, I think the better trader you become. I mean, obviously, if you know 4,000, let's compare it to languages. If you know 3,000 words, I mean, you can surely communicate decently with people in a particular language group. But if you know 5, you can understand the language even in more depth, right? I think the market structure is the same. It just gives a different level of understanding. So that's this week. Make sure to take a look at my daily wave analysis if you like, at least an analytics wave analysis. And well, I guess that wraps it up for today. I don't see any questions, so all is clear, I guess. We'll be back tomorrow with Fibonacci trading, and wish you all a great day. Many pips, happy trading, and a great day. Cheers, everyone.